world changed after 2010. Liquidity is the driver of the financial markets. Earnings growth do not matter anymore. It's less than 20% of a stock's performance. Overwhelmingly, it is the amount of capital that is in the system that is accessible, that can be utilized to speculate. We have broken the financial system. This is the new world. This is what we're doing. And I feel pity for anyone who is doing the opposite. People who have CFAs and MBAs. I wrote some of this stuff. I wrote some of the educational parts of the Kaya. Now I look at it and I say, I'm sorry. Everything I wrote was based on 1960s, 1970s understanding of economics and finance. When the central banks started to work together, all of a sudden it changed. And now momentum and liquidity is where we operate. And that is what we're going to do. That is the flashpoint. Those are the only flashpoints. It's not even close. So people are asking questions about Earthstone. Well, we sold Earthstone off. We sold Earthstone off because China is engaged right now in a deflationary mess. And until they turn around and say, we got to start printing, until they do that, everything falls. It bleeds slowly, but it happens. And it happened in 2015. It was a 16% drop on the S&P 500 because of China's economic problems. If you look at what happened in England in October, it was the same thing. So when momentum goes negative, you know what I'm not going to do? Worry about it. I'm not going to sit here and stare at my stocks because I knew exactly when I bought into, say, Blackstone Minerals, I'm getting paid 12%. My expectation is they're going to have to print. They're going to have to step back in. I'm not going to worry about that. I am in those names for the next 2 years. I feel confident about them. My expectation is liquidity is going to expand at some point. And then from there, those equities go up. You know what I'm not doing right now? Buying the 10-year bond. I wouldn't buy the 10-year bond with your money. I wouldn't want it. Duration is the problem. Bonds are the problem. And when the bond market goes, the equity market goes. Safety is a problem, while equity is worse. Bad money chases out good money. That is the rule of the financial market. So I want you to take a day like this, a day like today, a day like yesterday, a day like Friday, right? We got rid of our trades. We're sitting here. We're in cash. We're pretty liquid. I want you to embrace today. I want you to master your present. I want you to stop worrying about things you can't control. And again, on Thursday and Friday, did we not nail this? Did we not say in the last 11 days, sell calls on all your long positions? Hedge. Buy the SQQQ. Buy the SH. Buy the RWM. Now, this could be short-lived. We could have the Chinese government step in tomorrow and say we're going to pump $1 trillion in yuan into the economy. And if they do that, you know what I'm going to say. Back up the truck, buy the ying. If they ease, if they pump, we are buying this with both hands. And we're going to look for this stupid thing to go from 32 to 48 in maybe 5 days. This is what the market is now. It is a simulation. And the best thing that I can do, and I'm doing it with your interest and heart, I am only playing defense. I am your goalie. I am looking across the field and I am saying, there's risk there. There's risk there. If you want to short, do it. These are the optimal times.